Today at the 12 at 12, this is Paul Smith with 12 Rivers Realty. We are talking about, God, the chat's going off, by the way. What's up? I don't know what's going on with the chat. I don't even know who's in the chat at this point. A bunch of people talking. Dude, February 25th, 2026. I think it's our 16th week in a row. It's all about consistency. If we're trying to build community, this is what we're trying to do. Guys, my name is Paul Smith. You're tuning into the 12 at 12. We're going to talk about a lot of things today. We're not just going to talk about the Austin real estate market. We're going to talk about, what's happening in the world. We're going to talk about, talk about the overall kind of financial market, what's happening there, talk about AI. I don't know if anybody's tracking this stuff with OpenClaw. The gentleman that wrote that code is, basically just not necessarily acquired, but got to join the OpenAI team. So OpenClaw is a open source AI that is going ham right now. There's literally AI bots that are. I just read that one of them made $10,000 yesterday helping build apps. It's dope. It's really dope, actually. And so for those that are on X, I'm sure you're kind of following more so than those that are, than those that are on other platforms. It does seem like a lot of that stuff, those transactions do happen over there. By the way, I don't know what's going on with Instagram. So if you're on Instagram, guys, sorry, you'll be missing out on this one. But I'll go ahead and log back in and log out on that. And if that doesn't work, awesome. I just deleted everybody's stuff. Cool. Here we go. Guys, again, this is Paul Smith. You're tuning into the 12 at 12. We're going to talk about a bunch of fun stuff today. Let's talk about interest rates real quickly. But before we begin on that, what I'd like to do is let's get the thumbnail photos out the way. All right. Content thumbnails out the way. Guys, like and subscribe if you'd like to tune in. Please do so. We're having some moderate technical difficulties over here. I just got this new dope streaming system. And of course, shit happens as it does. So we are working on that now live in public. So I will go ahead and get a new stream key loaded up into Instagram. So that way there, hopefully we can go live on that. And again, this is the 12 at 12. My name's Paul Smith, 12 Rivers Realty. For those that don't know me, I've been in real estate for 20 years, developed, a few hundred homes at this point. Not only have I developed a few hundred homes, but I've also helped people buy and sell about 750, 800 homes at this point. I actually got to count it back up. And that's not me with a team. That's like Paul Smith has actually helped that many transactions. And why that's important is it's extremely important to understand how transactions work at the end of the day. And it's very important to understand the intricacies of a contract. I recently was able to help an agent out that's at another brokerage. And there was an issue with appraisal came back wrong and was able to help that person out. And the nice thing about that is I love the opportunity to go ahead and mentor people that aren't just at 12 Rivers, because ultimately at the end of the day, this is about giving back and about providing value and about providing service. And that's something that I'm grateful for as we continue to grow. Let me see if I can pull up. Hey, can you send me the latest Google Drive with all the stuff since I just deleted everything? Appreciate that. For those that don't know about Austin, Texas, we are the capital of Texas. Texas is a very pro-business state. So those that don't know, and those that are paying too much money in state income tax, if you're looking at your taxes and being like, wow, that's a lot of money for state income tax, we don't have that here in Texas. Not only do we not have that here in Texas, we have a very pro-growth government when it comes to business. So they're big into giving business incentives. Other thing is when it comes to energy, Texas is not on the, it's not on the energy grid. So it's got its own grid. And what that means is that we can operate a little bit differently than on the federal level. And, kind of jumping into that, you're seeing a lot of things coming out of Austin right now that are that are pretty neat, right? Because you just saw, those that don't know, something just came about with. By the way, I'm just going to nix Instagram altogether. Anybody, just tell me to get on. Just tell me to get on Facebook. Cool, perfect. So for those that don't know, Austin as a city, there is not another city in the world that has more colleges and college students within a 100-mile radius from Austin, Texas, which is neat. So it means that we have a very educated populace, which is great because that means that it's a very dense talent pool for companies to go ahead and recruit. And so when you have something that's very pro-growth with a lot of space, right? Think about all the land in Austin. Think about the land in the Austin MSA. And on top of that, you have a very educated populace, and we're starting to get kind of big city problems, traffic, all that stuff, versus other cities like your LAs of the world and your Houstons of the world, stuff like that. We really, compared to those cities, we really don't have problems like that at the end of the day, thankfully. And so, kind of with that to me is kind of the recipe for hypergrowth. And we've been having hypergrowth in Austin for a long time, comparatively to a lot of other cities, for sure. And some people will come back and say, well, the market's down. Yes, you're right. It's down from the top. However, it's never good if you just have up, right? There are corrections kind of within that. And that's something that we've seen so far. But what we're seeing now is another kind of rejuvenation and another kind of pivot, if you will, and another kind of evolution of Austin right now, right? And so a big part of that was what was called the Army Future Command, which is the U.S. Army's kind of gateway into investing in military startups. That is in Austin, Texas. They're based out of the Capital Factory. There's about $3 billion a year coming out of Austin, specifically to be invested in tech-forward startups. And that's where you're seeing a lot of companies coming out of Austin, moving to Austin to have access to those funds, and not only have access to those funds, but also being able to, not only being able to have access to those funds, but having kind of lobbyists here, people here. There's a lot of innovation happening here, and so one of the things that I want to talk about next, as we talk about this, is Texas is poised to become the world's top data center market by 2030. Well, I'm not surprised at the end of the day, right? We've already said that it's pro-business. One of the things in Austin is yes, we have tech companies that are doing SaaS and everything else. SaaS means software as a service, but we're also having a lot of manufacturing coming out of Austin too, right? We're having manufacturing, people that are actually manufacturing chips and semiconductors out of Austin, Texas. And guess what? The semiconductor is the thing in the chips. That's the thing that actually makes AI go. That's the important part of this, right? Is that's being manufactured in Austin, Texas. Whereas there was just a huge hit recently, and Wall Street just repriced a lot of companies that were doing software as a service or SaaS, because they're seeing how quickly AI is going to be replacing a lot of those jobs. Salesforce just got repriced. Dropbox just got repriced. QuickBooks will get repriced, because ultimately all these companies are charging a lot of money, and they're charging as a per seat basis on an enterprise level. AI is going to wipe that out. It's going to wipe it out pretty quickly. And again, the point of this conversation isn't oh my God, AI is going to take your job. The point of this conversation is how can we utilize AI in a way where it makes us more efficient. I'm having this conversation a lot right now with real estate agents, with entrepreneurs, especially if those are following kind of what's happening with OpenClaw, which is a open source AI program that is, I think it was written on Claude, but I think they're going to be transitioning over to OpenAI. Is that you're starting to have AI agents that are running autonomously on their own and solving real world problems. I literally on X, I had a conversation with one because I put out there that I was looking to try to figure out and build out an AI stack for the vertical integration within the title company world that I have. So, because those that don't know, I am in real estate and I own a real estate brokerage. I have a title company, I have a property management company, we do development as well, right? And so that's the vertical integration of things that are happening within the real estate world. And so I posted a question to a developer, and I got a response back, not only with a response, but then with a roadmap of how to do it specifically from an AI agent that just started 2 weeks ago. I've been following the agent, and kind of gave me a roadmap of how to do it, and then what it would charge me to do it. So I asked a question, it posed a solution, and then showed me how to do it, and told me that it would basically charge me $2,000 to do that. Now, part of me is like, shit, I feel like I should try it just to see how it works. But that's the world that we're going to be living in, is you can literally pose a question on social media, and then a solution comes in. And for me to build out that stack, if it was going to be based with humans doing it, would have been significantly more expensive than where we're at now. So again, I think that's where the world is going at the end of the day. Is for me, my thought process on AI is, I don't think it's going to take my job. I think that AI is going to enable me to have more time with my clients and have more face time with my clients. So ultimately, AI, Google searches, everything, it's only as good as the data that's in there. Well, if you think about this, right, the tip of the spear, so to speak, is the conversations that I'm having with developers, with economists, with people that this stuff hasn't been put into the computer world yet, right? And so unless if everybody's listening, which with Claude, there's a possibility that could come up, but might not be there yet, is essentially I'm able to have a conversation. And the difference is, once that makes the public, now AI is going to make it so that everybody knows about it. That's all well and good. But for me, the attrition is from when I find out this piece of information into where everybody knows about it. That's the delta in where there's an opportunity to make money. That is what AI is going to enable us to do, is essentially take a lot of the tasks that are kind of the mundane tasks. And don't get me wrong, it'll get to the point where I'm sure it could probably even do what I'm saying, but it'll take a lot of the tasks that you don't make a lot of money on. It can take those off the plate immediately. So that way you can then take that time and either one, spend more time with your family, or two, go spend more time with your clients and go spend more time in front of people, because that's really, for those in the entrepreneurship world, that is where the money is made. That's your highest dollar per hour, I'm going to assume. Now, if you are separately in a, if you're in a software business or other businesses where all of a sudden you're not writing code anymore because AI is doing this, I don't know enough about your business to know if that's going to take that or not. But what I do know is about my business and my businesses. There's going to be two things, right? A lot of people want to go back to analog, having meetings, kind of meetings in person. And then other folks are like, look, I'm going to buy a house using AI. Up to you if you want to do that. I would probably not suggest it. Prime example is, recently there was we can't just take what AI says as gospel, right? We have to do some fact checking at the end of the day. And because it's just not there. And it's only as good as the information that's put in there. And so I've had buyers literally send an inspection report into AI and then terminate contracts based off of stuff that really wasn't that big of a deal. But AI doesn't understand the perception. Like, AI's perception is just what's in there, but they're actually not on site at the property, understanding that if something's a conducive condition, what it really means is just that we have to, we just need to spend a couple $100 to site prep this specific area where it's a conducive condition for termites. Doesn't even mean we have termites. It's just conducive. There could be wood to ground contact. It could be an area where there could be a mud tube coming up behind it. All those things at the end of the day were things that OpenAI or ChatGPT told my client to terminate. And when we actually got out there with the inspector and with the termite company, realized this isn't a big deal. So again, I think it's great to kind of get a basis as far as the way that AI works. But really, until it gets to the point where AI is more of an expert than the person that you're working with. By the way, if you're working with an expert and AI is more than an expert than the person you're working with, work with new people. That's it. You're not like, if AI has more experience than the person you're working with, you probably either one, shouldn't be paying them that much, or two, you should probably start to work with professionals that have more experience than that at the end of the day, especially when you're talking about buying a home. But that could be anything in life. That could be attorneys. That could be anything. So that's my TED Talk for today, by the way. Guys, again, you're tuning into the 12 at 12 with Paul Smith. another company has just announced that they are going to bring their HQ to Austin. Surprise. And these two things kind of go hand in hand, by the way. One of the things when we start talking about data centers in general is the need for power is huge. It's insatiable. A data center, basically bringing on a data center, ends up being like the equivalent of, I don't know, providing power to 50,000 homes. Like it's a lot, maybe even more. And so we need power. And so, former Texas Governor Rick Perry is bringing the headquarters to Austin. It's called Quantum Leap Energy LLC. And so, yeah, they are bringing their HQ here, but then also it looks like at some point they will be bringing a nuclear power plant here as well, which obviously it's going to be needed. The great thing about nuclear power is that it is evolved drastically from kind of the 70s when the US kind of put the brakes on nuclear power. And I think it's going to be something that's needed going on in the future. One of the things that kind of blew my mind is one of my good friends he has a large fund here that invests in military tech. And he said that they just put an investment in a company that literally the chips that they're making will be used for running data centers in orbit. And literally these chips can take, they basically get recharged by sun, right? And so they get recharged by solar. And think about that. So now there will be a situation where they don't ever have to, they won't need a power plant at that point. They can be up in orbit, getting energy from the sun and powering, powering data centers and power other things up there. That's really, I think, where this is going down the road. But for the time being, dude, energy I feel like there's a huge arms race for energy. And I'm grateful that we're in Texas for that reason, because it's just, like I said, Texas is very pro-growth. These are all things, again, that you're seeing that are huge announcements for Austin. I think one of the things that I saw, I think it just hit ABJ today, that I think is one of the bigger things as far as an announcement goes for Austin is, for those that don't know, MD Anderson has been announced that they're coming to Austin. One, I think that's huge. We currently we have all different types of tech, right? There's, there's nuclear tech, there's military tech, there's software as tech, there's manufacturing. One of the things that we don't have a huge amount of right now is biotech. And that's another arm that's going to be coming to Austin. So I think one of the best things that probably happened for Austin biotech was Dell Medical, right? Because there's a lot of, a lot of professors and a lot of research and medical research happening at Dell Medical, which is UT's medical school. Now they started talking about bringing in MD Anderson, which is a large cancer hospital out of Houston. They're going to be opening up in Austin. And originally it was supposed to be at the Frank Irwin Center. That was demoed. They have now since shifted, and now it's going to be in the Domain. This is a huge thing for the Domain area, right? So this is going to be the JJ Pickle Center area, which UT owns. And so that was the JJ Pickle Research Center. The reason why they said they're moving there is because this MD Anderson is going to be a patient forward medical facility. And so to be patient forward, it means that they're going to need outdoor space for patients. And this is going to be an area where you're going to be able to do that. Well, what does that mean for this area? It's going to be huge for this area. Already, we've said that the Domain area is only 1/8 of a larger overlay called the North Burnett Gateway, where currently you have the ability to have buildings that are 30 stories tall. That, of course, will be redone, where you'll probably end up getting same as downtown, right? You'll probably have 50, 100-story buildings at some point as Austin continues to grow. So now you'll have Q2 Stadium anchoring in there. You'll have the Domain anchoring in there, and now you'll have MD Anderson anchoring in there. So looking at the real estate in that area, there's some great duplex pickups. I'm about to list 4 of them in that area that I think long-term will be a great investment. And why I think that's a great investment is right now rental rates are low. And investors, especially investors that have owned property for a long time, they have either just done a quick kind of freshen up to get that listed and try to raise the rents. But I do think that Austin rental rates are going to come up 10 to 30% over the next 2 years. And here's why, is that we have over the past 5 years, over consistent years, we were bringing on 20, 30, 40, up to 60,000 new apartments delivered in the Austin MSA each year. Guess what? This year, we're only delivering 8,000 new apartments. That's going to continue the next year. So these new deals, right? A lot of these developers, they're putting things under contract right now to deliver a new type of apartment product. Well, they have to go through the permit process. They have to deliver it, right? So if you find something today, it means that it's going to deliver 4 years from now. So that means that over the next 4 years, there's going to be a large amount of people still moving here. And we're only going to deliver, let's say, 8,000 to 20,000 apartments, which means that we're going to absorb those. Now, again, we've always talked about supply and demand, economics 101. If you start to have apartments where there's not as many as there's people coming in, the same thing happened in 2009, 2010. All of a sudden, we had rental rates shoot through the roof. That is going to happen again. And so with the MD Anderson kind of call out that's going at JJ Pickle, with the ability to have, duplexes in that, like, say, 300 to 450 range, that's a great price point. And I think that you'll start to see those 2-bedroom to 3-bedroom halves of duplexes go from, let's say, 1,250 to 1,400 for the 2 bedrooms and 1,400 to 1,600 for the 3 bedrooms. That'll become, for the 2 bedrooms, let's say it's 16 to 18. And on the 3 bedrooms, that probably becomes 18 to 2,200. So all of a sudden your cash flow jumps up drastically, which means that your investment jumps up drastically. And I think that's going to happen over the next 3 years. Now, when you take in consideration also the fact that you've got MD Anderson going in there with a lot of medical staff and everything else, dude, I don't know those that know, but a great submarket for renting right now is leasing to traveling nurses, in being able to have a kind of a medium term Airbnb situation. Because then also what that does, based on what's happened with the new big beautiful bill, you'll be able to now treat real estate as active income versus passive income. Caveat: talk to your CPA. I'm not a CPA. Not financial advice, but really financial advice. But definitely talk to your CPA on that. But to my understanding, if you have an Airbnb, all of a sudden real estate gets treated as a active versus passive investment, which is great because now you can write your real estate losses off against your W-2. That's a great thing about me being in real estate, is I have all these different avenues of money coming in. And so then if I have any real estate losses, I can now take that loss against W-2 income, which is awesome. Again, I have not necessarily I've been always kind of long on the domain, but now I'm really long on the domain because of the amount of dollars that's coming in with MD Anderson coming in there. I'll call up some stats later to see exactly how many doctors are going to be working out of there. But dude, that is huge. Think about, doctors are very high income earners. Everyone, for the most part, I would say just about everybody that works in the medical facility is a high income earner or making more than the average. So again, I think that is something that's super attractive. If I'm a first-time home buyer and I'm looking at buying, I would potentially look at buying a duplex in that area and then renting out one side and then keeping the other. And if you look at what your cost to hold will be, it'll be drastically different. I mean, to the point where it would probably cost you less than $1,500 a month to hold that duplex at that point. And that's, if you've got, let's say it's less than $1,500 a month and you've got 2 other bedrooms, then you can go ahead and lease those out for, let's say, $750 a month, bills all in. So now you own a place and maybe you're less than $500 a month to own it. That sounds brilliant to me. And that's probably something, if I was Paul in his 20-somethings, kind of wish I did that, because that's a great way to start on your net worth. Guys, again, this is Paul Smith. You're tuning into the 12 at 12. It's been a pleasure. Y'all hit me up if you need anything. Peace.